Good morning, everybody. Happy new week. Today is Monday, 24th of January, 2022. My name is Heritage Adisa, market analyst at HotForex. And quickly, as usual, we'll check through the markets, see what the dominant sentiment is, see if there are opportunities, and then how we can take advantage of it. But please remember that this is just a communication material, and nothing in this communication contains or should be considered as investment advice or investment recommendation. Users acknowledge that investment in FX and CFD products is characterized by a certain degree of uncertainty, and that any investment of this nature involves a high level of risk for which users are solely responsible and liable. Now, what we have this morning in terms of the overall mood in the market, it's a more mixed start to the day. Yes, we could see I'm talking about intraday now, mixed up. But overall, I mean, we still have a risk of very much dominance in the markets. Equities see a little bit of reprieve right this week after or following last week's dismal price action. We had so much downside, last week, and then so far this week we've seen just a little bit of tick higher, but on the balance of things, that's still nothing to worry about. I mean, there's still a lot of major worries for market, major negative flows for equities, right? So far. And if you talk about equities, what are the reasons we're seeing this downside in equities? First of all, tightening or monetary policy tightening coming up, especially from the Federal Reserve and spitting out to the rest of all other central banks. Obviously, that is bad news for equities. Why? Because first of all, free money reduces. Apart from that, it also is set to curb growth, because if you look at where we are currently with the global economic recovery thereabout, things are starting to slow down, right? And there's expectation for even slowdown to continue, but inflation is the problem. So now, with central banks now tighten amidst a likely downturn in economic recovery, I mean, that's also super bad, for global markets generally. And then we've seen equities fall on the back of that fear so far. But in terms of the FX, currencies are really moving lackluster so far. I mean, not a lot of movement in terms of difference, right? Or net changes for high beta currencies so far. The card is still a little bit strong, in line with oil. But apart from that, the high beta currencies like Aussie, even the Kiwi is starting to lose some, flavor just now so far, right? Apart from that, we also have tension also developing in Ukraine, with Russia trying to go in and US trying to stop them, and all of that is still very much in play. Although right now markets are not paying so much attention to it just yet, but obviously it's one to keep on the back of your on your radar. Just pay attention to it, right? If you look at currently now, the US has ordered families of diplomats to leave the embassies there. So obviously that is becoming something to a building up story there. And then they've also told Russia that they also go into Ukraine, with any forceful or forcefully enter or in that manner again, they will see significant response from the US. So all of that is still very much under the radar there, but key to pay attention to. Apart from this as well, we've also had earnings seasons, or we are in earnings season. And that's where major companies around the world release their financials, for the previous quarter, right? So far, we've not really had the best of prints. Some of the major banks have disappointed. We've had Netflix disappoint, and we have a flush of them going into the week ahead as well. So obviously, that's another thing to watch out for. If they keep coming out, negative as well, that is definitely not good news for equities and the likes. Right? We really look at what the asset classes are saying right now. But for the cumulative strength, as that when I wrote this, CAD was leading the FX majors. USD was a little bit stronger, with US index being supported so far. NZD was a touch supported, right? But on the other hand, we have AUD week, we have CHF week, and we also have the Euro week. Now, let's quickly look at what we have. Like I was talking about with the US500, right? We saw that slight bounce, just very tiny. But if you look at on the balance of things, I mean, this hasn't really done much so far, right? We've seen it flatten out of the move so far. And then obviously at this level we're bouncing off from is also a key level of support. First of all, we have a round number there around the 4,400. But apart from that as well, if you look back, was also key, support level going back to, mid of 2021, also this as resistance in early October 2021, and now we are at this level. Now, on a balance of things, considering the moves that we had last week, I mean, the downside we had last week was quite a lot, from the highs here to the lows here we had, right? We are also still trading at 38.2 retracement level if you measure from early or the lows of last year, more or less, right, around early March of 2021. So yes, we've seen some pullback at this level, obviously with support here with round number there, 38.2% retracement level. We could see some level of pullback retracement, but I don't think we're out of the woods yet, especially now that we are down below the 200-day moving average and the 100-day moving average. Obviously, technicals do not, help the equities so far. We're having FOMC meeting later, I think a couple of days, and I think on Wednesday. And obviously, before key events, a must-watch event like this, it's very likely to see markets really just, lay in wait. So, I mean, we're not seeing anything convincing from these levels just yet. We could see pullbacks, we could see meandering so far, but obviously want to pay so much attention to on this front. On the US100 front as well, also an interesting one in terms of key support level, right? Yes, we talk about the downside. We've seen all month actually. All month so far, we've cleared out key support levels from the moving averages, 100, 200, 50 and 100 rather, from key support level around this 15,500. Now we are also back testing the 14,500 as well. If you look here, it was previous support. I mean, the lows from mid of 2021 mostly, and now we are back here. Now, it doesn't mean that we will see a reversal. I mean, overall, the sentiment is still very much negative, so we could see further pullbacks from here, further downside from here, but we cannot rule out any, a longer or an extended pullback from this region, especially considering the lows that we've had or we've printed so far. On the VIX, still not printing anything positive for markets, still well above the 20 level, even well above the 25 level as well. And as long as equities keep being overly elevated like this, obviously fear in markets will remain, and that's definitely bad news for the likes of equities. For the US oil, still keeping resilient actually. You consider the moves that we had last week for the likes of US500 equities generally. I mean, oil has still kept its cool, right? For last week, for example, we ended up very close to flat levels, which was good. And now so far in today's session, we're seeing some level of upside, especially still above, let's see this. Okay, well above the 100 and the 50, day moving average as well, and still above this key previous resistance that we had going back to October 2021. As long as we keep supported, that is still good, although negative sentiment is a bad news for oil, but because of low supply constraint that we have around the world, obviously it's keeping oil a little bit elevated just now so far, right? One other one, the bond market is still trading very much lackluster so far. Yes, we could see tick highs, obviously bad news for equities, but even with all of that, nothing really major to latch onto just yet. In FX, like I said, the currencies are really moving in tandem. Yeah, we could talk about the weakness in high beta currencies against foreign currencies amid the negative environment, right? But even for Aussie and Kiwi, for example, Aussie versus the JPY, right? Yes, we've seen for the downside. Yes, we were below the 50 and 100 moving average. We tested it, moved lower as well. But now we're trading into support level as well, right? Very key support level around 81. 81.5, right? This at 1.5 as well was also previous resistance and support. I mean, yes, these are things that are keeping me a little bit more numb, more patient in terms of taking a new position just yet. It's just Monday. There's still a lot to go on for the week. And then these support levels could see some form of pullbacks. And even with that, yes, I didn't expect so much moves in terms of volumes ahead of the FOMC meeting. I still want to be very, very watchful about. So I'm not really excited about jumping into new, just yet so far. But also want to watch at the back of the mind. I'm looking at the likes of JPY as well, also trading into support. So these are things that are keeping me a little bit numb so far in terms of looking to ride the risk sentiment that we have just yet. USJPY is also an interesting one. We had this key, because as long as you have that negative sentiment, you expect USD to fall against JPY, right? So far in the session, we came back to retest this previous lows going back to 20th of January on a very short-term basis. We tested here again on Friday, and now we were back here testing again, and then we are back lower, right? Yes, we've not been able to clear out these overall lows, right? And then you can see we are more in a cage so far. But I think once we get the FOMC meeting, I don't expect anything major to come up from here. But even with this also tells you into support we're trading into now. Also tells you be more patient, be more prudent, might be a better way to go about things so far just yet. Like I said, mostly a mixed environment, but on a balance, more tilted risk off. Risk assets are heading into support levels. So, I mean, it becomes really tricky to sell at the lows, right? On the calendar, we're expecting PMIs a flush of PMIs, starting with the Eurozone PMIs, right? And then back to the UK as well as the US later in the day. But apart from that, I'm not expecting so much in terms of data releases. Market will pay attention to sentiment, pay attention to earnings releases, pay attention to what equities are doing, obviously the dollar as well, and then all ahead of the FOMC meeting. Until we get that, I don't expect anything major, to go on in markets so far. So I'll be patient, sit on my hands a bit, and wait to see if we can get anything tangible, to work with later in the day. So that's it for now. Thank you very much. If you have any questions, please do not hesitate to ask. I would always do our best to help. Thank you. Do enjoy the rest of the trading session.